Well, let's get talking now. The finance bill, despite being a piece of legislation, no doubt has profound implications for investment, citizens, welfare, and the Nigerian economy. The 2022 finance bill, since its passage about the National Assembly last week, has continued to generate public outcry from economists who noted that the proposed legislation has far-reaching implications for investors and citizens, as it will affect cost of production, undermine investors' confidence, impact on inflationary pressure, as well as increase the country's corporate tax to almost 35%, which is one of the highest globally. Let's talk more about the implications of the legislation on the citizens and overall performance of the nation's fragile economy. I'm being joined live in our Lagos studio by a lawyer and manager. He's with PricewaterhouseCoopers. It's Mr. Emmanuel Akpeme. Thank you so much. Compliments of the season. Happy New Year to you.
Thank you so much.
It's good to have you start the show.
Thank you so much. Thank you for having me here.
Yes. Well, let's get talking business quickly. Give a brief of a summary of your overview of the Finance Bill 2022. Is President's assent so we're waiting for now?
Yeah,
so
thank you so much, Tolu. So yes, as you just mentioned, right, it is still a bill. In the process of lawmaking, a bill only becomes an act after the President gives his assent to that particular bill. Yes. So yes, from the name Finance Bill, right, it is about a bill or a law that speaks to government finances generally. So it could be about taxes, it could be about government borrowings, government expenditures, or government revenue. But the Finance Bill is a vehicle that most countries have now made use of to enable the implementation of the budget for that particular year. And Nigeria adopted this particular model since 2019. The Finance Bill 2022 is actually the fourth in the series since 2022. Yeah. And the Minister of Finance has come up to say that this particular Finance Bill has some sort of focused drivers. First of all, she mentioned that it will have to do with a lot of tax reforms, tax equity reforms. She also mentioned that there will be some provisions regarding climate change and green growth provisions. And again, the minister mentioned that in this same finance bill, we have to look at some reforms in the existing tax incentives and even maybe bringing in some new tax incentives. And then, as you also know, there is also the big one in the House, which is also a way to increase or generate revenue for the government. Now, Finance Bill 2022 makes amendments to 11 existing laws. 11 existing laws. And with all this, we are hoping that the President will give his assent, and so that we'll look towards how it will go in the course of the year.
Now, you've talked about 11 now. What are some silent or new provisions in that finance bill? I see some changes, some increases for me as a layman. Treasury education tax from 2.5% to 3% is very significant here. And of course, other tax issue, company income tax and all of that, saying that this might undermine investors. So what are the salient or new provisions in this finance bill?
Okay, thank you, Tolu. So this particular bill has a whole lot of provisions, some amendments and some novel, totally new provisions that were being brought in. But because of time, I want to categorize them, put them into 4 buckets, and to just make it easier and simpler. So we have one of the category, which I will call renaming and improvement of the corporate governance of the Federal Tax Authority. Then second, I want to call it provisions relating to climate change and also some global trends. Then the fourth one I will speak about is tax equity. The third one will be tax equity. Okay. And then while the fourth one in this bucket of categories will be provisions relating to increase in revenue, which was what you also mentioned just now. Now, the first one salient provision that Nigerians should be aware of is the renaming of the Federal Tax Authority. The Federal Inland Revenue Service will now be renamed and called the Nigerian Revenue Service. That's NRS. Instead of FIRS, what we'll now have will be NRS. And In addition, the finance bill has brought in a demarcation between the board and the management. What we have currently is that the executive chairman, who is the chief executive of the service, that's FIRS, also is the chairman of the FIRS board. But with this particular finance bill, there's a sort of a demarcation between the person who occupies the position of the chairman of the board, that is now called the Nigerian Revenue Service Board, and also the person who will serve as the chief executive of the service. And this person will now no longer be called executive chairman, but will be referred to as the commissioner general. Now, the second category in the bucket, as I mentioned, will be climate change. So we see some provisions relating to encouraging companies that are into commercial winning, capture, production, and utilization of associated and non-associated gas. So if a company is to go into these gas operations and production, they will benefit some form of incentives, which is called gas utilization investment credits, tax credits. So this is a way of encouraging people, companies, corporates, both foreign and local, to go into that. And in addition to this particular incentive for these companies that are going into gas utilization operations, they will also benefit a 100% capital allowance deduction for any accessible year. So in an assessment year, a company that has gone into these operations can deduct the total sum of the eligible capital expenditure that they made in that particular operation. You see, and now still to discourage gas flaring. Remember, I'm talking about climate change. Companies that vent or flare gas, they will now be subject to a 50% company income tax. You get it? So this is a way to encourage, and also based on our commitment to climate change, right? So that is on that hand. Then the third category that I mentioned is tax equity. And this has to do with the provision relating to the what do I call it now? Capital Gains Tax Act. Capital Gains Tax Act, the finance bill is proposing some amendments, and one of the amendments is that the definition of assets should include digital assets. I remember sometime last year, the Securities and Exchange Commission released rules bordering on digital assets. And so what the finance bill has come to do now, which is part of global trend, is to say those persons who make gain from the disposal of digital assets, they will be subject to capital gains tax. And still on tax equity, the finance bill also proposed that losses made from disposal of an asset is now deductible from the gain that you made from disposal of an asset of similar class. And let me just make an example or illustration on this. Initially, if as an individual, I make investment in the company by purchasing the shares of company A, and I also make investment in company B by purchasing the shares of company B. If at the point of disposing my shares in company A, I make a loss of, say, 2,000 naira, whilst within the same assessment year, I dispose my shares in company B and make a gain of 4,000 naira. The current position is that I will be taxed company gains, my 4,000 naira will be subject to a 10% company gains tax without any consideration to the loss I made in company A. However, with this finance bill, what it is saying now is that the loss I made in company A can now be deducted from that gain I made in company B. And so I will only be made to pay company gains tax on 2,000 after subtracting 2,000 from 4,000. You get it? And if for any reason we swap the position, company A, I made loss in company A for 4,000, whilst I made gain in company B for 2,000. What it means is that if you do the deduction, I will still have a deficit, a loss. The finance bill says that you can carry it forward, that loss carried forward, so that if at any point I make an investment in the similar asset class and now make a gain, I can then deduct that same loss I have carried forward. But in this time around, I cannot carry the loss forward beyond 5 years. And then the last category, which is revenue increase and revenue sharing. The finance bill has proposed a 0.5% levy on all imports.
Yes.
Imports outside Africa.
Africa.
If there are any form of imports coming in outside Africa, they'll be subject to a 0.5% levy. In addition, which was the point you mentioned, they have, the finance bill has also increased the current 2.5% rate for the tertiary education tax to 3%. And then it also makes provision to the fact that if for any reason you as an individual, you are making a transaction of and through the electronic money transfer, there's a levy on that electronic money transfer of 15 naira for every 10,000 naira and above, either debit or credit. What the finance bill has come to say is that in making the revenue sharing, before now, local governments were not part of it. Now, they have divided it in this way, that the federal government will take 15%, state government will take 50%, whilst local government will have access to 35%. So these are just a summary of the top provisions. And if I would add, which is one that people should also be looking at, all services, the company, the Customs, Excise, Tariff, etc. Consolidation Act has now been amended to ensure that all services in Nigeria going forward will be subject to excise and duty. Remember, initially it was only for telecommunication services. Now it has been expanded to include all services. So this, in a nutshell, is the summary of the salient provisions in the finance bill.
But I would ask if you see any gaps or foreseeable challenges regarding this this document or the implementation of this document.
Yes, I would say that there are some foreseeable challenges regarding the implementation, and I want to make them into three. First of all, the first challenge I will mention is the issue of digital assets. If you recall, Tolu, some years ago, 1 or 2 years ago, the Central Bank of Nigeria released a circular wherein it's mentioned that banks should not, it prohibited banks from assisting or engaging in any form of supporting digital or cryptocurrencies, right, or exchanges. Yeah. Now, that particular circular is yet to be set aside from CBN. And now we have a finance bill that is saying, or that is proposing, that disposal of digital assets should be subject to capital gains tax. Now, how do we actually align this with the position of Central Bank of Nigeria? So I think the challenge will be, how do you monitor? Because currently, most of the persons that deal with cryptocurrencies deal with it on a P2P basis. And so how do we really monitor and get to know how this particular person is making a gain or this particular person is making a loss? So I think there will be need generally for everyone, every party, every stakeholder, every regulator to be on the same page in order to really drive that. And then secondly, in terms of the challenge I see regarding the implementation is, Tolu, we are in election year. This is 2023. Most government bodies and all that, they are sort of winding up. So how do we really go about the implementation? If you look at 2022, the excise duty on non-alcoholic, carbonated and sweetened beverages, it took over 8 months before we could get the regulation. And now this finance bill is saying that there's going to be regulation or guidelines regarding how the excise duties on the services will be. When will that come? When are we going to start implementing it? So these are some of the challenges I see that may come up in the course of implementation.
But do you think it would still achieve its objectives? You know, what will be the impact on the economy?
Okay, in achieving its objectives, maybe I should, it will now depend on the objectives. And maybe let me use the initial 4 categories that I mentioned, right? Now, in terms of renaming the Federal Tax Authority, the impact on Nigerians have gone through various forms of renaming of government parastatals and government agencies. What Nigerians care about is results. So renaming the Federal Inland Revenue Service to Nigeria Revenue Service may not really have full impact, but it is about getting the results. But in terms of the corporate governance, I think it's a good, is a laudable one, because initially of this current situation is the executive chairman is also the chairman of the board. So whatever proposals that is being tabled or brought before the board is also coming before him. It's just like saying a CEO who is coming to present some proposals before the board of directors, and the CEO is still the chairman of the board of directors. So there are instances where there might be conflict of interest. But now with the separation of these two, I think of these two offices, I think it is a good one. Now, on the second category, which is on climate change, I think it is one that will be achieved. It's a laudable one because making those particular those incentives available for companies who would want to go into the winning, capture, and production and utilization of gas, whether associated or non-associated, it is a good one. It will be an incentive for more companies to come in to really invest in that sector. And regarding the increase in the tax rates, especially for the tertiary education tax, that particular increase will make Nigeria to be among the highest countries in the world wherein companies are subjects that are paying companies income tax, among the highest tax rates. And I think, is this the right time? How will the industry look at it? Because when that particular increase in the tax rate will impact on the final consumer, and also even the bottom line of these companies. So I think in a way, it depends on what will happen, right? But I do not see that the goal of the government in terms of raising that, depending on how the companies will look at it, it might really have some repercussions. Even as you said, if one of the news items you read today, some persons are already agitating against it. So then another impact is that excise duty on services. Services generally. What it means is most of the services we enjoy today will increase. The price of most of the services we enjoy today will increase because those providers of the services will throw it back to the final consumers.
All right, there. Well, that is much time can take. I must thank you. Interesting conversation with you as usual. I've been speaking to lawyer and manager PricewaterhouseCoopers, Mr. Emmanuel Akpeme. They're speaking, making sense of the finance bill 2022. We wait for it to become an act and we move on from it. Thank you so much. Happy New Year to you. It's good to have you again on the show.
Thank you so much.
All right.